Hello and welcome again on Stocks Advisory channel. In today's episode, we will talk about Callon Petroleum, traded at New York Stock Exchange, ticker name CPE. Well, CPE today was declining with minus 16%, which is very big for a company of market capitalization of 1.5 billions. And you see that especially the decline took place in the last third of the trading session today, according to Yahoo Finance. After hours, we are 1.55%, just kind of positive volatility because this void still works as an attractor for the price. We could go all the way to 34, but still it's a decline. And if you look at the daily charts, you understand what's happening. These are first signs of possible correction, because if you see, we had a very nice two waves growth starting from February of this year. From this moment, we see that there were two big waves, so wave number one and wave number two. And these were classical growths on so-called 20-50-200 pattern. We will talk about this now. And now we see the sudden break of the wave. So the wave breakage means that the wave goes like this, and instead of finishing normally and going for next wave, we actually go like this and then we break. And that's the wave break. Usually what might happen, we could either rebound immediately, but in general, it means that we could go a bit lower and we could pierce lower levels, especially those moving averages. And speaking of moving averages, here daily chart, we have three moving averages. Here on the left, you see their legends. These are moving averages 20, 50, and 200 being green, blue, and red line correspondingly. You see these curves here. So we just stopped at moving average 20, but given the fact also that tomorrow is let's say last day of the trading week, we might pierce it further a little bit and actually go for a bit more correction. But overall, of course, this stock is still quite positive, so we could play on those volatilities and those declines, because you see that last two waves sent the price strongly RSI wise in overbought area. And of course, these two big waves of overbought cannot just, let's say, go without being noticed by price action. We need to recharge RSI. What does it mean? It means that when you have very high RSI, there are many people with profit sitting in the position. And usually when there are a lot of people with profit sitting in the position, what they do, of course, they take the profit, and this causes the price to decline, therefore also sending RSI downward. So now we are closer to the middle, meaning that there is a draw between people who are with loss yet or who are still who are in the profit. So meaning that the price decline might equilibrate, especially this is true for big companies like more than 1 billion. And now this is a classical corrective move for the stock, which is so-called 20-50-200. So this is the stock whose moving averages 20, 50, and 200 are located like this, one on top of each other. And until this is the case, and until the price is above moving average 20, if you are mid and long-term trader, you can just sit in this position and enjoy it, grow with it. But if you're a short-term trader or daily trader, you need to catch the wave in order to engage in the right time. And that's what we will discuss now, because at the moment what you see that moving averages are starting to decelerate, so they're kind of bending slightly. You can see these tendencies already. Moving average 20, 50, and the same you can see for moving average 200. So they tend to bend downwards, so meaning that second derivative is about to become zero and negative, so it's a deceleration. Also MACD wise, you see where after making two nice upwards waves were going down, so probably will develop negative wave before returning to positive move. So these are all indications of correction, especially not forgetting that from November till the current moment we went all the way from actually somewhere about 45 to 42, so almost 10 times growth, which is incredible in this short period. And of course there should be some correcting moves. Therefore we just need to wait to enter at the best appropriate levels to catch the wave and to make the profit. So the first wave level will be, of course, this one. So it's the wave when the current step started to decelerate, so it will be 31, and actually another one would be about just a bit higher here 28. So this will make it a first entry opportunity for us, which might come tomorrow already. And if you would write it here, this will be between 28 all the way till $31 here. So with this, it will be first entry opportunity. Then if we rebounds, of course, you can make the profit and then you can take it. And here it's really advised, as always, but here especially, to take a profit from 10 to 15%, because these major corrective moves could still continue. So we could still go lower with this, and you don't want to oversit in the position to make it expired with a sense of profitability. So just take the profit and then either re-enter or check other opportunities if needed. So if we decline further, which is also possible if this is a major correction, the situation could be similar to one we saw by somewhere end of January, when moving average 50 worked as support line. And we see there is a double support level, so moving average 50 itself, but also let's say these support levels of 2080 somewhere, and actually about 24. So this will make for us another entry, another average down opportunity, again based on purely technical move, because we still might see our technical correction there. And so this will be then 2080 to 24. Yes, a bit broad channel, you can already see it, more than 10%, but also the levels from which we decline are also big, so we need to take this into account as well. So this would be second correction-based move, which still could be okay and within the technical, let's say, expectations. We still might go a little bit lower. This could be coming with some negative expectations, let's say, or negative information coming. Not yet really the negative catalyst in a strong sense, but just, let's say, a reassessment of the growth. This can be, and if this is happening, we might return to all the way to this consolidation channel that was there in the period from December to the beginning of February. And this channel is actually between 12 to almost 16. Again, could be working as a very strong and very nice averaging down here if the price go there. It's not that we will expect it to go, but still it is yet within the technical possibility, although rare, but still possible if it's a very severe correction move. And then it's again will be a double support, because moving average 200, this red line is also there. So we have 2 times double support levels between 2080-24 and 1216. Yes, big differences, of course, but you also don't need to forget that from November we increased almost 10 times, so declines could be also very significant. And then what we need to take into account, still very rare, very almost impossible, but can happen, it's a negative catalyst. This is part of our so-called mixed analysis that we provided our channel in our opinion videos. So mixed analysis is based on 3 pillars. It's technical analysis, then non-linear averaging down based on support resist channels. That's what we discussed, and these are the channels we designate here. And the third one is mitigating risks due to very negative catalysts. This could be news, this could be some out-of-market news, some general stuff like COVID, for example, in 2020. It could be some reorganization, etc., etc. So there are many sources for these negative catalysts, but you never know when they come, but you need to be prepared. And if this is happening, of course, you need to be at the very principal levels of support in order to be safe and still exit with the profit. So here, for this channel, for this stock, and this support channel would be between 8 and 6, because you see this actually work even higher. You can see another one, so it will be between 8 and 7 almost, because these are the levels of very deep and principal support lines that were there on decline during August-September action, but also during increase there was let's say this restart of the wave in November growth sequence. So this will be very rare, not expected. It's not that we predict it goes there, it's where we want to mitigate. It will be between 7 and 8. Of course, you can say, wow, it's many times lower than now. Yes, indeed, this is true, but that's the position, that's the stock, and it can show these volatilities. And why is it we discuss so deep levels? Because There are two major ways to trade. So one is really for those who trade professional, sitting on 15-minute candles or even shorter every day with many monitors around him or her. And this is a professional technical trading. There people take losses. They put stop losses because for them time is more important. They just don't wait, exit, try another opportunity. Here we follow a different strategy. This is for those who still play on daily basis but do it in evenings. Just check the position from your phone, re-enter if needed, etc., etc. I call it not like a daily job, still professional trading this could be, but not sitting on minute time candles. And here we think that it's better to wait a little bit longer. It's still okay, but then you don't take any losses. You don't need to go through that experience of a stop loss or cutting loss, but you just finish with a draw or with a positive trade. So this is the outcome of the trade, expected one, but this might take a bit longer time. Therefore, you need to be prepared for longer and more, let's say, levels based, not linear averaging down. Therefore, we discuss those levels, and also you need to mitigate all risks like midterm risks due to negative catalysts. Because if you trade on the minute base or 15-minute base candles, usually negative catalyst can come, but it's a bit longer than you trade, so that the chance to get it is not that high. So with this being said, all nice stories. So this is the numerical card. If you're more for graphical representation, you can trade it here. And again, whenever the rebounds takes place, first three levels purely technical, last one if negative catalyst comes in, the target profit is 10 to 15% based on your money allocated in the position. Yes, some people say, well, it's not enough, I can wait longer. It's up to you, of course, you are the boss, but our strategy is to develop positive thinking, positive trading, many times, multiple times, and that's how you can make your money. So we are not betting on one trade to become rich. With this being said, it's clear, and speaking of how non-linearly average down, here it's a 6-portion play, meaning that you can buy with strategy 1, 1, 2, 2. What does it mean? It means that funds that you would like to play here, you can split in 6 portions. I will write it here. And then you can buy with 1 portion in the first circle, average down, still technically again with 1 portion in the second, still technically again last time in the third. And if negative catalyst kicks in, you can again average down with 2 portions. So while other people will be taking losses, you can just average down and prepare to exit with a profit on this very bad news if it comes. And most expected trade is, of course, these first 2 levels where you rebounce and play, let's say, within this channel. So this would be the most expected play, but you need to be prepared for worst. You need to be prepared to mitigate risks. And this way, if you mitigate all risks, then what is left is only profit taking. So that's our philosophy. With this being said, good luck with CPE. Quite nice stock though. And of course, its remarkable move could lead to correction, but also could give us some nice opportunities to make a profit. So good luck with it, and see you at another episodes of Stocks Advisory channel.